Okay, so let's start in with the second question of this handout I asked you guys to take a look at. On June 30th, the company declared a cash dividend 35 cents per common share to the shareholders of record on July 15th. The cash dividend will be paid on July 31st. The company has 500,000 shares authorized, 100,000 shares outstanding. Prepare the journal entries required on June 30th, July 15th, and July 31st. All right, start with June 30th. All right. Dividend declared. All right. So that's a liability at that point. Dividend payable, put on the books with a credit, and we got to reduce retained earnings. That's what dividends are paid out of. All right. Now, it gave us 35 cents per share. So part of the question is picking out the proper number, right? Now, authorized shares. Think about what that means. An authorized share just means that the corporation was created and has authorization to issue those shares, but they haven't necessarily been issued. In this case, 500,000 have been authorized, but only 100,000 are outstanding. And it's only outstanding shares that collect the dividend. All right. So it's the 100,000, 35 cents. All right. And that's all we need on June 30th. It references July 15th, but that is distractor information or confusion because you don't need an entry on July 15th. The date of record just means whoever happens to own those shares, because presumably if you've got 100,000 shares, there may be some investors that have sold their shares between June 30th and July 31st. Whoever owns the shares on July 15th is entitled to that dividend. All right. And on an unrelated note, like when that happens, if you were selling your shares on July 14th, you're going to price them to include that dividend. Right. So that's the way that works. But no entry. And the actual payment date is July 31st. All right. That's when the dividend liability is paid. So that comes off the books with a debit. Checks are mailed. So you hit the cash account. All right. 35,000. And that's all this problem needs. So that's all for now.